This is the most important chart I want to show you, and I'm going to do it with the picture. This is the momentum rally. I am bearish. Here's why. I know we got CPI, and who knows, bulls and bears can both get gorged, by the way. They can both get bloody. But here's what I've got. This has been extremely helpful since the low in January, just no question about it. And I think that this is going to be the chart to watch for the momentum rally to, not only peter out, which I already said last Thursday, not this last one, but the one before that. So January 2nd, and then, February 2nd. But now look, we got a head and shoulders. So this is 3 tops in this momentum thrust. Okay. And now I believe we're going to come back down and test this trend line. So somewhere in there, this trend line, that trend line, these moving averages. Now keep in mind, this level, of course, you don't trade this. This is a ratio. I love ratio analysis. You'll really see why I love ratio analysis in a minute, but this is also why I really love ratio analysis. You can see the November, December top, and then the rollover, right? Energy outperforms growth. Growth outperforms energy in that March, April timeframe. And then energy outperforms growth. And then growth starts to outperform energy. And then we top out on August 16th, and then energy outperforms growth, right? So then we got a huge CPI print right here. Massive. But we couldn't get over the moving average. So, And we got FOMC. We got another one right here. These one-day wonders that were impressive and didn't matter. We got tapped down firmly, very, very nicely. And then energy outperformed growth until here. This was the absolute, and I have a picture. I take this every once in a while. And I have it from January 5th, where I point at it and I said, I think this is going to turn. And then the next day on January 6th, it does. And the only reason I did that on the 5th is because on the 4th, I saw volume come into net buying, cumulative volume come into the market, right? So anyway, from the January 5th low all the way up, and bankruptcy risk be damned, those stocks moved the most. It went all the way up, had a little shallow pullback, went up, a little shallow pullback, and then that was the quant quake. Quants are done. The long short, fully long exposed hedge funds are done. There's very little hedging. And now we have what I would call more than a petering out. We actually have a reversal pattern in play. I think this comes back. And I don't think CPI is going to save this. Okay, that's my baseline bet. I do not think CPI is going to save this. So anyone who is shorting, you have more of a tailwind, even with CPI, although CPI could be dramatic. That's going to put some more pressure on this momentum rollover. And I think the combo deal is going to create a huge inflection point once we get back here. Once we get back here, and I literally just said we've got 4 levels of support in this ratio, we either bounce or it's trounce, and it will make a big difference. Okay, so I hope that is very, very, very clear. I think we're going to have some weakness regardless of what CPI brings for us. SPY is still sitting right on top of that 406.79. And SPX, here's a little chart to help on an intraday. For what it's worth, we got right back up. So 40.75 is going to be the trigger when it breaks. Right now, we're moving right back up into probably. All right, so let's just say this bounce looks to peter out about 4117 to 4127. Again, it looks like this bounce is going to peter out about 4117 to 4127. We're on our way to that 417, I think 427, like I said, but we're going to peter out with SPY before CPI. Just don't have it going on this morning. All right. Let's do this. This is the chart that I mentioned. I really think is starting to roll over, CPI or regardless. Okay. This basically was that momentum thrust. Be careful. I think we're going to have some pullback here. I've got it real time right here. That's number 1. We're having an itty bitty little green. See that? I don't trust it. All right. So we hit the 4117. first price target for the SPY chase. We'll see if we can get all the way back up to 4127, but then that is where I think it hits its head. Yeah, it looks pretty bold up to 4127, just so you know. I would say SPX is going to hit its head on 4127. That's my price target for today, and that's where I'm sticking with. 8:30 tomorrow morning, all bets are off. I have no idea. We could come right back up into this trend line. Wouldn't surprise me. By the way, that'd be like 4147, right? So far from this morning, 4117, I said, and then 4127. We could push tomorrow with a CPI that is bullish, meaning it falls to that 5.7% that I put out as a bold call for a deflation impulse because of the new methodology and we could definitely pop right back up to 4147, which I absolutely think is going to be sell the news. Does that make sense? I don't think this is going to be so easy to get above 4147. Yeah, we're just not having a lot of bearish here. We got a divergence with the volume is muted, not muted, is positive, right? Heading back into the 717, and the market is pushing higher into that 4127. We're there. All right, so this is really getting into it. I would take a little bit of care as we hit that 4127.